How's it going, everyone? It's Sam. I want to give you an update on Voyager Digital because they just sent out a pretty important update, which was really fascinating. You can tell that they had some things in mind when they acquired that company just a few days ago. So we're going to take a look at it. If you remember, just a few days ago, they acquired Coinify for $81 million. Now we can kind of see why they might have already been doing that, or we already kind of knew why they were doing it, right? It's to help them increase their ability to work with business to business and also allow them to accept or help people accept cryptocurrencies as payments. But you can see that they just partnered with UCO, which is an electronic payment solutions provider, and they just sent this out. So I want to break it down a little bit here today because you might be saying, okay, what's this really mean? So I want to take a look at USO and just talk about Voyager in general. Now, if you guys don't mind hitting the like button, I really appreciate that. It helps out the channel a lot. Also, there is a link down to Voyager underneath the video. I always believe in testing out your investment. So if you want to test it out, you can try out the platform, deposit $100, and you get $25 worth of Bitcoin for free. So this is pretty interesting. They're announcing their partnership with this company, and they're going to help facilitate cryptocurrency payments globally at the merchant and independent software vendor level. So what did this do to the stock? Well, it pushed it up about 6% on this news. It was pretty exciting. I mean, the stock was already moving up a little bit before that because of the crypto market just doing well. But you can see 1230 came around and it pushed up the stock pretty quickly. So there was the news announcement. It came up a couple percent on this news. Now, they talk about how this is an innovative company, they're excited to work with them, all that normal stuff. But what does this mean? What is USIO? Well, they're actually a publicly traded company, so you can actually check out their financials. They say that they're an emerging leader in the fintech landscape. They help with payment facilitation, ACH, prepaid cards issuing, print and mail and electronic bill presentation or presentment and payment. So they bring in about $32 million worth of revenue. They actually look like they have decent financials, just looking at really broadly, right? So $200,000 worth of debt and $4.3 million in cash. So they are about $137 million worth of market cap. They process about $1.87 billion just in the first quarter this year, which is up significantly from last year. So they are growing fairly quickly. You can see that just over the last couple of years, they have been increasing their revenues. And I think this is actually a pretty cool integration or a partnership for Voyager. The reason I say this is almost all of their money, all the revenue, like we've talked about before, comes from trading, right? It comes from the spreads. It comes from the actual amount of volume on their platform. And this is something that's different. This is something that is away from how much money is in their clients' accounts and how much people are trading. It takes away from maybe the uncertainty of it all, right? They're growing really quickly, but also if cryptocurrency falls 50% again and they lose some users or active users, that could hurt their platform. But if they're able to grow in other parts of their business, like setting up the stock exchange part of their business or set up the business to business side of their business, they're able to help companies and help individuals pay for things in crypto and accept payments in crypto. That's a more steady form of income. I mean, take a look at MasterCard and Visa. These are pretty steady businesses. Sure, like if people are holding onto their money and not spending as much, that's not great. But the economy is actually fairly strong right now. Some people can make the case that it won't be strong. But this part of their business should be much steadier than fees on crypto, especially as there is going to probably be a race to the bottom in fees where people stop charging any fees to trade in crypto and they will offer other services. That's what's happened in stocks. So this is going to be really important. If they can get into the business to business space, and I realize that $30 million isn't all that much. That was back in 2020, so it probably will be higher. So let's see what their revenue actually was this first quarter. It probably will be higher here moving forward, but this is going to be something that will hopefully help them add some steadier income and is a pretty big partnership right off the bat. You can see that they were growing in Q2 because they had 85% of the volume with only 6 weeks to go. So they'll probably double revenue here in Q2 or so. But this is going to be something that's very steady. It will be another form of income that, hey, yeah, they had to spend $80 million, but that's done. They diluted the company by 3% and then paid out some cash. That's over though. And now this is a more stable company. So they're going to help them. Maybe they get, a couple million here or there, a couple million a quarter. Still, that will be huge for them moving forward. They're going to make more partnerships. I mean, imagine they work with Visa or MasterCard, and that might be really far out. That might be something that like Coinbase does, or a larger cryptocurrency company, or BlockFi. But as they build out other sides of their business, this is going to be a less risky stock. So right now, the fact is they have extreme growth. They are growing faster than about any company you can look at on the market. I mean, they made what, like $2 million a quarter just as of 2 or 3 quarters ago, and now they're at over $100 million. They haven't given the hard numbers yet, but for them to be at that growth and they're a $2 billion company, the fact is they're not being priced for their growth. If this was in a different industry, let's say this was trucking or logistics or something like that, or software, if they were growing this quickly, they would be valued much higher. But the fact is they are in crypto, and people are worried about crypto either going down, crypto adoption stopping, or just they're not going to be able to grow as much because maybe this is all hype. That's why big investors aren't buying, right? Because right now you could buy part of this company pretty cheaply. If you're a big hedge fund manager, you could buy 5% pretty cheaply. That's $100 million. I've never seen a company that's grown 50x revenues over the last couple quarters and not going from like 100,000 to 5 million or something like that. Like going to 100 million in a few quarters that has been treated at this multiple, or has been trading at this multiple. So the thing is, I think this is great. This partnership came out very timely. I think they definitely had this set up, obviously, because they bought the company yesterday or the day before, and now they're coming out with the fact that they have a partnership. Now, is it the be-all, end-all? No, but a couple $1 million of diversified income will definitely help them, I think, over the coming years. So thank you guys so much for watching. I really appreciate it. I appreciate you hitting the like button and checking out Voyager underneath the video. I have not been buying Voyager on this news, but I've been buying them over the last couple months when they've fallen down anyways. So I'm happy that they're going up, but I'm not trying to rush back in and buy a ton more. I've been doing that over the last couple months, but let me know if you are doing that down below. Again, if you're looking at it and wondering if it's a good time to buy, I honestly think that it still has a lot of upside. But let me know your thoughts down below the video. Thank you guys, and I will see you in the next one. Bye.